Let's bring in Loop Capital Markets Managing Director Anthony Chukumba. Anthony, great to have you with us. How much of this is a tell on the consumer at large, and how much of this is specifically a Dollar Gen story?
I think it's much more a Dollar Gen story than it is about the consumer at large. I mean, look, I've heard a lot of really salient points that you've made. I mean, there are some macroeconomic headwinds, but Dollar General hasn't just missed, the last 2 quarters. It's 4 out of the last 5. There was a management change, and it just doesn't seem like the new gang can shoot straight. So let's not make this all about macro. I think there are some Dollar General specific reasons that they've, started to, sort of shoot themselves in the foot.
Anthony, absolutely right. And the stock has been punished on the back of that. But you listen to what that third quarter guidance from Five Below was a disaster. Dollar Tree, not good as well. There are a few other stores in that same world that are feeling similar pressure. Definitely Dollar Gen it's self-inflicted to a point, but this seems to be bigger than that, in my opinion.
Well, the one other thing, and it's kind of macro-related, but not macro-related, and you talk about Five Below, it's shrink, and that's hitting everyone, whether you're talking about a Dollar General, a Dollar Tree, a Five Below, it's hitting a number of retailers, and that's, and that's something that I don't think is going to get much better anytime soon, because there generally are just not a lot of consequences for theft.
Yeah, and I would imagine that, when you're talking about and you're hearing the guidance that these consumers at these, lower end stores are trading down, that underscores the pressure that they are under. And therefore, that is the environment in which shrink and some of these thefts happen.
Yeah, I would definitely agree with that. And yeah, I mean, look, one thing that all these retailers are struggling with, whether it is a Dollar General, whether it's a Dollar Tree, a Walmart, a Target, is that mix shift towards consumables. Those are much lower margin relative to discretionary items. And yeah, I mean, I think, a struggling consumer, unfortunately, is a consumer who's more likely to go for the 5-finger discount.
It's Karen. Thanks for being on. So I thought the traffic numbers for Dollar General actually wasn't great. How does that compare? Does that sort of go to your point of that's a Dollar General specific thing because the stores weren't inviting or whatever it was? How does that compare to traffic of Targets and Walmarts?
Yeah, 100%. So look, the easiest comp, the best comp for Dollar General is Family Dollar, which is owned by Dollar Tree. Family Dollar did a nearly 6% comp last quarter, where Dollar General had a small comp decline, and Family Dollar had positive traffic. So a lot of this is very Dollar General specific. Specifically, they have been underinvesting in store labor, and it's really starting to bite them right in the keister.
So, Anthony, when we talk about and think about investing in retail, can we think about it remaining bifurcated, or does the economy get to a point where those troubles migrate up the chain?
So, here's the thing. I mean, retail is a perennial stock pickers market. I'll give you another name that just reported really good numbers today, Ollie's Bargain Outlet. And that's also going for a low-income consumer, but they're just executing at a much higher level. Their merchandising has gotten much, much better. And so I don't think it's necessarily upscale versus downscale, because, by the way, there's a lot of pressure right now on high-ticket discretionary purchases. I mean, you saw, Best Buy and Williams-Sonoma. Now, in both cases, the numbers were better than expected, maybe better than feared. But in both cases, their comp store sales were down pretty significantly. So I don't think we can just bifurcate it high-end versus low-end.